JJ, the CPA here. Hope you're doing well. Hey, thanks for tuning in. Wanted to give everybody an update. This last Friday, SBA loaded us up. They like to take care of business and let everybody else know about it Friday afternoons, which is probably a good thing. Also, they had an update to the SBA FAQs last week. It was just one on the SBA FAQs. It was question number 48. And it's in essence directed towards the lenders, indicating that they have a few extra days to get the documentation in that they need to on loans they've already done. And then the SBA came out with two different guidelines. And you can go to my website, jjthecpahelp.com. There's no booby traps. It's just there for you for free. It's a community service website. But if you go to the link, which is a page called SBA, so it's jjthecpahelp.com/SBA, I've got everything in here that I'm talking about. And so quick overview on this, on the two sets of guidelines, there was one on loan forgiveness, and you'll see an icon on my website that says SBA guidelines, loan forgiveness, May 22nd, and then there's also one that's SBA guidelines 522, but then it says SBA loan review procedures. So two different guidelines. One was 19 pages, the other was 26 pages. So let me give you a couple of highlights. I'll start with the SBA guidelines that covered the loan review and procedures, just going over some of my notes that I made here. Got a bunch of them, okay? And I'm gonna be coming up with a video series should come out tomorrow. I'm about halfway through it, but it's either gonna be 6 or 7 videos, but I'm trying to put it into bite-size videos to cover the kind of major calculations, kind of some of the basic or simpler, not simpler, some of the basic accounting that's going to go into this. And if we do it one step at a time, each step may feel a little more basic. But a couple of things to note here, very interesting. So when we're talking about the loan review procedures, the SBA has made it clear, which has not been probably a secret, but they made it clear in this one that the SBA will review and randomly the eligibility, the amount, the use, and the forgiveness amount of SBA forgiveness applications. And so probably no real surprise there, but they did make it clear they will be reviewing any and all sizes, not just the ones that are over 2 million. They indicate to keep your documents related to this for 6 years. So I doubt anybody comes and knocking and wanting to look at anything a year or two, or I should say 2 to 3 years down the road. But what that tells you is there's a 6-year statute of limitation, which just means that they do have 6 years to come back and review the eligibility, the amount, your use, and the forgiveness. It does indicate that they expect there'll be an appeal process. So they indicated they'll come up with those steps, but if there's an adjustment, meaning you put in a application for forgiveness and they make an adjustment to it, you can contest it, you can appeal it, steps on how that's done to be revealed later. And then it really went into great length on this SBA guideline related to the review procedures, that the lenders just take the numbers in good faith. They do a recalculation in some respects. They are able to just rely on the borrower. So I'm not really sure. I love banks. I'm not really sure where they've earned their 5%, in the sense that if they're really just going to now take info and put it in, and it sounds like maybe they're not going to be in a position where they're planning to help, even though they're the judge of the forgiveness. I'm a little disappointed in that. I'm a little disappointed that the SBA isn't requiring the banks to do more related to this. So again, not a reflection on the banks, because the banks are going to do what the SBA says, and the SBA is saying, hey, lenders, just check it over, let us know. I'm being a little facetious, but at the same time, basically those that help clients are going to have to really make a decision. How are they going to help them in the preparation process of the PPP? Also, the EIDL makes it very clear any EIDL advances, no matter when they were received, EIDL, the advance portion, which is up to the $10,000, will reduce the loan forgiveness, and the SBA will be the one that reduces it. So when you're looking at the loan forgiveness application, you indicate the EIDL advance, but it will be the SBA that reduces it. As you notice on the forgiveness application, the EIDL amount does not reduce it. Also, it indicated that the lender's fees will be affected if they gave out money that was to an ineligible recipient, or they gave out ineligible amounts, then the fees will be reduced. That only seems fair. So that was kind of the major highlights on the SBA guidelines related to the review procedures and the borrower and lender responsibilities. Again, you'll find that on my website, jjthecpahelp.com/SBA, as well as this next one. This is another set of guidelines, 26 pages long, and it's the loan forgiveness guidelines that also came out Friday, May 22nd. And so I'm going to give you some highlights, but on that I have 3 full notes, and that's where I'm going to have then a video series to walk through a number of these things. But let me give you some highlights. And so in this SBA guideline, in number 1, just something to note is that payroll can include commissions. I think that's been made clear through other things, but I've had a lot of questions about it. Cash tips for those that make money based on tips, right? Restaurants. The past tips that were paid, the average past tips, or a good faith, reasonable effort of what the tips would be, is what can be paid out. Remember, got to be paid out. In number 2, I thought the SBA kind of danced around, but it basically is indicating in this, with no dancing around, that you must complete Form 3508, which is the forgiveness application, period. If you got the money, you got to fill it out. You don't have a choice of saying, you know what, don't worry about forgiving any of it. I'll just pay it all back. So they made it clear on that. And then they did indicate that, again, that the SBA will deduct the EIDL advance. No due date in here of when you have to put in the application for forgiveness that I could find, but it is 60 days for the bank, nothing new there, to give you an approval or what amount they are going to approve of your loan forgiveness application. And then they've indicated that any ineligible amounts will not be forgiven. And later in this, it indicates that the SBA, in my opinion, is going to probably ask for that back immediately. Meaning if you got a dollar amount, based on paying out 1099s, they're going to want that money back immediately. Now they just use the word may want it back immediately, but I really think reading between the lines, they're going to want it. In number 3 on the SBA guidelines related to loan forgiveness, it indicated that the payroll is the amount paid on the day it was worked, incurred, or would have been for employees that aren't working for a business that's open, right? So there have been questions on, okay, well, how do we go about this? Like, how many hours did they work? Or how do we know what payroll period to roll in if you have employees that are not working? Meaning they're getting paid by the employer because the Paycheck Protection Program has been given, the employer's paying that out. So how do you figure out the salary and how do you figure out the hours? Well, it's based on what you've been doing with that employee. So that was kind of our hunch, but this really does make it clear. But it must be paid during the 56 days, and it's acceptable, though, that anything that incurred, that occurred that's paid immediately after the closing of the 56 days will count, even if, okay, you're using the covered period or the alternative payroll period. And I've got a video on that, specifically going through that payroll. But here's the deal. They use this language in number 3B. It indicates that hazard pay can be included. So I had a lot of questions. Can you use the hazard pay? And I was like, well, paid if you have to. It's unsure if it would be includable because, you know, in essence, it's kind of an even Steven. What were you paying them? Got to pay the same now. But it indicates that hazard pay, bonuses, and commissions, even on the furloughed employees up to the $100,000 per employee, can be included. It did make it clear here. We knew it from the application, but it goes one step further to really make it clear that there is a cap on the owner employees and the self-employed. Okay, this part's not necessarily new, on the amount of payroll cost for those individuals. And that is, what was it for 2019 divided by 52 weeks times 8 weeks. So for those that receive self-employment earnings from a partnership or wages from an S Corp or wages from a C Corp, the wages that were paid in 2019 to the employee owners, you divide it by 52 weeks times 8, that's the max amount. Now, it does still have to have been paid out. It's just that's the maximum amount that can be included. And then for the self-employed, we know this, it's line 31 of what was used to obtain the loan on Schedule C divided by 52 weeks times 8. But here's the part where it made it clear, because I was wondering about this, but that general partners and the self-employed do not get to include their health insurance or their retirement plans. Okay, seems unfair, but it makes it clear that no forgiveness amount will include the health and retirement for the self-employed or the general partners, you know, basically partners. It did also indicate, this is new, that for 2019, the amount that was paid for the health insurance and the retirement plan on the owner employees, okay, it's maxed to what was paid in 19. So what am I saying there? Whatever was paid in health insurance on 19, whatever the retirement plan employer contribution was for 19, that's the max that can be included in the PPP loan forgiveness application for the owner employees, right? So if last year the health insurance was $1,000 a month for the owner employee, and now it's $1,200, only $1,000 a month will be able to be included, even though there was more spent on that owner employee. And this is all in section or item 3 of the SBA guidelines on forgiveness. And then we're talking about the utilities. I thought this was really interesting, and I'll have a video on this kind of going through the calculation, but check this out. They literally state in the guidelines that someone could pay utilities in June for May. They could pay utilities in July for June, and then the utilities that would have been that would have occurred through the remainder of July to the end of the cover period could also be included. What am I telling you? That you have a 56-day period. So they literally have an example in there that the covered period would be June 1 through July 26. This is in the SBA guidelines. So what they indicate is that if someone paid the utilities for May and June in the covered period, right? So you're in June paying for May's utilities. You're in July paying for June's utilities, but it also indicated that they could include the 26 days of July of utilities, even though they're going to be paid after the 8-week period. Kind of interesting. Now, they didn't give an example on rent, but I do feel on rent, I mean, it does indicate paid and incurred. So I wish they would have given us example based on rent, because, you know, if you were behind on the rent, you know, is it, well, I paid the rent. So that one's a little up in the air. And when I really dissect it, I feel like it's only going to include 8 weeks of rent. Now, maybe the SBA will come out with something that gives us an on-point example related to rent, but I feel like the rent will still only be for the 8 weeks. And it also indicates very clearly there'll be no prepayments for mortgage interest that can be included. Now, it went one step further in these guidelines. And again, I'm going to have a series of videos on this, but this is huge. And we had a CPA that was on our show today live that asked about this. But for the employer to not get penalized, to get dinged for an employee that was furloughed or wasn't being paid because the employer didn't have the money, maybe they're on POA, maybe they're not. But the employer that goes back to the employee and says, hey, I can rehire you, I can pay you your full hours or your full pay, and the employee says, no, not going to do it. Here's the new stipulation on this, because I've been talking about this, and it's the, how do you avoid this quote unquote penalty? But here's the new one. You have to report that employee to the Unemployment Commission. So it indicates that it has to be in writing, your offer to say, hey, employee, you can come on back, and you have to offer the same pay, period, same pay, period. And then they have to reject it, okay? And then you have to share it with the state agency. So let me be clear on this. The way I'm reading this is that if you say, hey, come on back for 75% of your pay, you will not get this safe harbor. You would need to pay them 100% of what you were paying them before. Same pay. And then there's this isn't new, but it kind of hits you like a cold splash of water. And this is all in item 5. Item 5 goes through H, A through H. So in item 5A is where you're going to find that language. Go ahead and read it for yourself. And then in 5B, it talks about the percentage of reduction of forgiveness. But this isn't new, but the way they wrote it, you're like, yeah, they're not messing around here. So what this is talking about is that the percentage of reduction in your FTEs, your full-time employees, whatever percentage of reduction there is, assuming you don't hit the safe harbor, okay, that's the same percentage you'll lose on your loan forgiveness. So if you had 10 FTEs you have a couple periods to pick from, but then during your covered period, you only have 8 FTEs, okay? So that's a 20% drop. Then only 80% of your loan forgiveness will be counted. And what does that mean? You would have gone through the whole calculation. You're going to go, hey, here's my loan forgiveness, right? And then you're going to go, oh, actually it's that. And then only 80% of that is forgiven. So the FTE, pay attention to the videos that are coming out on that, because there's several ways to look at it. But the one part I want you to take away from this is that FTEs are a huge part of here. They're based on 40 hours a week. They did make that clear in here that they are settling on the 40 hours a week and nothing else, which they talk about in 5C. And then in 5D, they continue to talk about the FTEs. In 5E, man, that one's a mind bender. I had to keep going back and re-reviewing my notes on how to look at the wage decrease, because if there's a wage decrease of more than 25%, and that's employee by employee, okay, then you get dinged for the amount of reduction in excess of 25%. Stated another way, if you reduce down somebody's pay 30%, okay, the first 25% of reduction, okay, you don't get dinged for only in this one provision, okay, it would be the amount above the 25% reduction in pay, which in this example, if the pay went down by 30%, then 5% of that reduction, okay, not the 25%, just the 5% would reduce down your loan forgiveness. But it's based on your annualized pay to that employee January 1st through March 31st, right? So it's a 3-month period that you have to annualize. So you have to take the pay in those 3 months, okay? And you would have to, because that's a quarter, multiply it by 4, divide it by 52, times 8 to get the annualized amount to then compare to what you actually paid. All right, we're gonna need some software on this, folks. All right, and then, hey, wrapping up here, so that was in 5E. 5F, it is good because it really does clarify. This was not really clear in my mind before. It really does clarify in this SBA guidelines about loan forgiveness that came out May 22nd, that if you have reduced FTEs and reduced salary, they've gone through and they've made sure that you don't get a double penalty, right? And so in a nutshell, and I'll have a video that goes through this, but in a nutshell, the reduction in wages not attributable to an FTE reduction, okay, is what will be included in the wages. Let me state that another way. If the wages for the one employee, this is not aggregate, if the wages for the one employee, okay, is down, but because the FTE is down, then that dollar amount part of the calculation is not included. Yeah, so I'll have a series of videos where I'm gonna just do one bite size. So there's gonna be a video on 5A, a video on 5B, on 5C, 5D, 5E, 5F, 5G, and 5H. But anyways, my point is that they do clarify, okay, well, which one is it? Because if I got a reduction in FTE and a reduction in salary, which one am I getting reduced on? Is it both? Well, if it's due to FTE, then you don't worry about the salary. If the salary's down, but FTE wasn't affected, then you're going with the salary. And that's why from the beginning, all the way back to the beginning, I've been saying there's really no way to play the game here. You can't just reduce FTEs and then increase salaries. A lot of people thought they could increase their own salary as the owner. Nope. I am surprised that they didn't put anything in here that, the owner's family or something like that. I'm glad. And then on 5H, it does indicate that if an employee is fired due to cause, resigns, or requests less work, that reduction in the FTE and the salary basically won't count for that employee, okay? And then number 6 walks through the documents that are required, which I had to read it at least 5 times to understand what in the world are they actually saying here, because they just talked in one big circle. I don't know that they meant to, but they said, in 1106, it requires this, and then 1106 subsection, it requires this. And so basically it says go to the loan forgiveness application and look at the documents, which should be basically on page 10. So those are the highlights of the 3 things that came out right here before the holiday weekend. And stay tuned for a series of videos that's going to walk through each one of these. I'm going to get the whiteboard up, and I'll let you know that it's coming from this SBA guideline number 5A. And then I'll let you know that it applies to loan forgiveness line, so forth, right? So I'll tie the guideline directly to the application. I think instead of just telling you what the guideline is, I would rather say, here's the guideline, here's how the calculation works, and it goes with this line item. And I'll tell you this right now, the application is really it's in an illogical order for me, okay? It just doesn't make really a lot of sense the way that it's ordered and where you calculate the info. So I'll just be doing the videos in the order of the application. And know this, as it relates to the walkthrough of the application, I'm going to walk through these subsets. Hey, the last thing I'll note, and if you made it till here, you're awesome, okay? But I will tell you this, that there is talks in Congress that the House is going to pass something that indicates that we might have up to 24 weeks, not 8. And then the Senate is saying, well, we'll do 16 weeks instead of 8. There's also talk that more than 25% of the loan could be used for non-payroll costs, but that's all to be seen. And I don't know that that really would affect any of these calculations. It would just be what period of time. So let's see what comes to that. I do feel like having more time would be better for everyone to be able to at least have some of these dollars as they're going back open. The only issue there is that for the companies that got in on this early, and then they've been closed for 4 to 6 weeks of it, it's not going to provide the same relief, which, no one should be whining about it, but it's not going to provide the same relief as a company that's now opening and they still have another 4 to 6 weeks. So, it's going to be interesting to see how that all falls out. And at the end of the day, though, anything that makes it easier on us that receive the PPP, easier just in the sense of having more of an opportunity to use the funds as directed, I think will go a long way. So, all right, well, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.